Okay, folks, welcome to 22nd of September 2022. So what we're going to look at this morning is a little the cross section of the S&P, the different sectors, materials, energy, financials, industrials. And we're going to just have a quick look at, what are we seeing broadly across these subsectors of the S&P. So, let's go through a few of these and see if we can spot any opportunities. But now we're starting to really print some decent lows on the SPOs. It's really worth. So let's start off here. I want to keep this short. Material sector. Okay, now we're looking at on each of these. We're looking at monthly bars. Okay, monthly bars. All right, so the big view here. All right, and so what we're seeing. Just time axis. Just 10. Okay, so. Yeah, here, we're trading on material 70, spot 71s. Really, I think for me, what I'm going to be looking at would be buying opportunities at 64s. I think this just isn't cheap enough at the moment. Generally, I think with supply chain issues, hiring issues, COVID lockdowns in China, I mean, get out the laundry list. Materials, if it's going on sale, I think it's not going to stay on sale for very long, essentially. Okay, so that's one thing to note there. So look, 64s, 65s, that pullback is going to be basically the 2018 highs. Okay, pullback on there. We, in this compression area, we did break out there in October 2020. But now we're coming off. So that's materials. All right. You can get out Fibonacci's and whatnot if you want. I mean, just for example, on this one, Fibonacci from this sort of 2020 low, which was very low in Feb there before COVID kicked in. We're pretty much 38.2 retracement already done on that. I think a 50% retracement coming in at the 64s is a pretty decent. I think there's worse trades you could get on there for your portfolio. All right, moving on. Energy. All right, energy. Yeah, I mean, let's look at the historicals here on XLE. So I've traded XLE quite a bit over the past couple of years. Look, if you're an oil bug, I think this is a pretty decent ETF to trade. Starting off at 99 there. Yeah, I remember I had 55 calls on this and just missed out. Like, I think it was out of the money by like 50 cents or something. The last time I traded options on this, I can't remember the expiry. It might have been Feb 21 expiry. So let's see, was it Feb 21 expiries? Yeah, I think it was. Yeah, March. Yeah, might have been March expiries. You can see there, just March just was out of the money until June, actually, on the 55s. Actually, I think it was 55s on May high. So, unlucky trade there, pretty much. But anyway, listen, I think on XLE, monthly bars, what's good here? I think, well, let's remove this. I think 72s. A little bit pricey. I think the world and his mother has been on this trade in this market, and doing very well. Doing very well. So kind of capturing there from even mid last year to where we are now. I mean, you're looking at you've done pretty much 100% return on that. Got up to 93s, and you would have been buying there maybe June, July last year, like 45s, 47s, 48s, in and around here. But what would be a good downside target for this? You see, I just think a lot of people are going to be holding, this and not really liquidating too much. Even if oil does come back like $10, I can't see XLE breaching below 65s. So you could be getting in at 65s and in for the long swing here. Looking back to the 0809, I mean, the run up to 0809 was very frothy prices on oil. Big crash, obviously, in late 08. 09, nice recovery. Then into 2014, this was kind of the last big bull run that we had. in oil, 2014s, sort of like the end of that. But I remember it well. I was in Texas at the time, and they just had to start, granting export licenses because this is way too much oil, all as a result of the shale boom and the shale revolution. Yeah, the shale revolution, the fracking, all that stuff here. So, but fracking and shale fracking is really a short run horizon because you can release a ton of oil very quickly up front in the first 3 to 6 months, but you tap through that reserve quite quickly. So there's a very steep tail off on fracking production, right? But I think it's slightly different now. The frackers aren't back in force in the US. Production levels are still actually pretty bad in the US. The rig count isn't rallying back as fast as you would imagine, simply because people are a little scared of committing capital. The shareholders want capital returned above expansion at the moment. So, that's why we're not really off to the races to the upside here. I think there's a lot of value to be had in the constituent companies of XLE. So if you want to play them on a broad stroke, you're going to be buying XLE. And you can look up the constituent companies of XLE here, but it's like Chevron, Exxon, Conoco, Occidental, you name it. But I like XLE. I don't know if I like it at 75s, maybe 72s, 65s. All right, let's move on. Let's move on. Financials. This is these are the slime bags of the stock market here. So financials. Well, you've seen a nice little price pullback there on the 3050s. I think the financials, I honestly, I think the financials are quite well protected at the moment. And generally speaking, 30 is not a bad area. Let me see if I can bring this over here like that. This is the '07 high, '09 low, $4. I mean, yeah, really, really, really cheap there. Yeah, I think this is slow and steady. You got to look into what sort of dividends these pay. Obviously, you're going to want to get paid dividends for holding some of these ETFs. You don't want to be just kind of looking for growth. You want to be getting paid. You want to get paid. You don't want to just be taking the risk for these guys because So, I like 30s as a baseline. I would not hold it under 29s because I think we're going to explore this lower range here if it goes below 29s. And what is that? That's sort of the lows of '04, right? And a little bit of a capitulation point for the market before it then continued down in late '08. So, you see there is interest to hold the market there and to try and bounce from there. And again, from late 2018, early 2019, into that 22s area, bid back up to 32s or 31s, back down and held the line there again at 22s, right? 22s. So, some good value to be had there, I think, on 22s. And you're probably sitting there saying, well, Tim, I want to make a trade. I want to be in a trade, but, I'm not going to get that trade today or tomorrow. And yeah, I mean, fine. But if you set up alerts, email and audio alerts on your systems to trigger off, because if you do get 22s, you're going to be in a pretty decent position, right? Jesse Livermore making money in the setting, So I like 22s on the financials now. It could be a while until we get that. I don't see a broad stroke breakdown coming. I mean, I think if we breach the 22s in a meaningful way, I think the world is going to have some bigger problems on its hands than just breakdown in finance. So, you'll probably see a little push down to the 26s, take a bid, and then break down. Yeah, but I think generally over a 10-year horizon, I think 22s is pretty good on this. It could be until mid next year. See that the trend coming in here, sort of confluence here between the kind of '04 lows and this trend. It's happening in kind of July next year. So that could happen. That could happen. All right, let's move on to industrials. Industrials, never a big one for me. But as you can see, this thing is crazy bid up and potentially coming back down to earth a little bit here. So we've got a trend, a mother trend up here. This is actually the mother trend here. Breached through COVID. You're going to see that in most of these products, the breach of mother uptrends in COVID. And yeah, look, 80s for a trend, test, hold, and go. You know what I mean? But this thing has been in a bull run since '09. So is it time to break down the trend? I don't know. It's not a big sector for me. I mean, got what, like 41, the 42s there, the '07 highs, frothy times, 2015 highs at 58.23s. Got the 2018 highs, which I think may breach. I think they may be breached. So for me, mid-range interest here, maybe something like this, like the 70s maybe. But you know, not buying it where it is now. You know, if you got a 5 to 10 year horizon, you know, we're not buying these things now. I think we will get good opportunities to buy in at these levels. You know, utilities, the safety net for the market. Yeah, utility super high here. Jeez. Of course, these guys are having a hell of a time now, given the energy picture, right? So these utilities are really getting rattled to the max here. Here's the mother uptrend right there. So 40s. You know, with these trends, you know, it's easy to say, you know, that's never going to trade, Tim. I mean, if the market came down there, that's crazy. It's not going to trade down there for like 20 years, Tim. Fine, but when we had COVID, I think when we had COVID, I think it was I think it was Exxon traded. Yeah, Exxon here traded a trend that began when the market started trading. So this is like last time this trend had been touched pre-COVID was 1987 November, and this started from the opening price in '85. And look what happened in COVID. You know, now who wants to buy Exxon at $35? Yeah, I'll take some of that, please. You know, so you know, just kind of show you that I'm not entirely crazy. Yeah. Now, does that happen every day? No, it was a black swan event. All right. So let's get back to utilities. What prices do I like that I think will be trading in the next 5 to 10 years? Probably 62s. Somewhere mid range here. Kind of feels like we need to come back into this area. I actually don't like positioning anything here for the next year. I think this market's it just can't keep going up at this rate. It just can't. It's just kicked into an overdrive a point here. You know, the channel, I think it was to hold the channel going up, I think probably 57s. You know, and that's going to be after a bear market has really sunken in. So healthcare, like looking across these markets and these constituencies, I actually don't think we have good 5-year horizon buying opportunities. I think 10-year maybe 10-year horizon buying opportunities, but nothing's cheap enough. Nothing is cheap enough. That's what I'm seeing right now. There's a nice level. 119s on XLV. I like that. Other uptrend. Other trend starts in '09 here. Yeah, I mean, there's a linear regression of the uptrend from '09. So the kind of normalized channel doesn't really come back into play until $100 on this, and that's quite the ways down from where we are. So we could be under quite a capitulation here. Because we've seen with the S&P and the Dow that they've gotten, to use a Paul Tudor Jones expression, they've got way too out front on their skis here. We're kind of, breaching trends up here. And the Dow is actually a better example. Dow here. So this is the linear regression up channel on the Dow. See this? And we're back in here, and this is what I talked about yesterday in the pre-market. We have to stay down in this channel. Now then, if we go back onto some of these markets like XLV, healthcare here, it's way above its regression channel. Yeah, I think there may be a reckoning in there for healthcare. All right, consumer discretionary. This is the hot potato to sell right now. This is come down quite a bit, as you can see from the start of the year. Let's do a little rudimentary analysis on this thing. Get a trend going. Yeah, nice little buying point there in April 2020 on this one. Giving up these higher levels. Just remove some of these here. And then let's see where we're. Now these are monthly bars, I mean, with monthly bar sort of analysis, I mean, you're going to wait a while for the trade, but when you get the trade, you're into a pretty strong spot. So look, we've come down in June to the February 2020 high, actually pre-COVID high, and taken a lovely bounce there of about $40, $45. But it's coming back in your face here. So anything in and around 100s, 110s, I think you're going to be doing good on a 10-year horizon here, like 124s as well. Anywhere in this spot, I like that. Consumer discretionary XLY. Tech. Let's sell the shit out of this one. So I'm kind of not interested in buying a dip on the Nasdaq here. The .com bust pre-high 65.44s. We're trading 126s on this thing right now. And Fibonacci extension has been put on this one. Yeah, I'm going to take that off actually. Well, yeah, I'm going to take that off for now. And just look at this in plain sight of day. I think, look, when you want to talk about fair value, what's cheap, what's expensive, blah, 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 I think 110s on this, I'm not a buyer at where it is now. That means I'm not a dip buyer. I actually like something below 100s, like 94 is actually there, 95. I like the look of that. I might actually put on a little area on each one of these to see how we fare. What I said there, what did I say? I said here. in there. Real estate. Oof, frothy one. All right, real estate. We'll finish up, I think, on this in a minute. Real estate, yeah, bit frothy, getting hammered down here. Probably want to remove a few of these levels. XLRE is the handle on this ETF. And you're going to have multiple different banks and derivatives agencies offering exposure on these. They'll just have a different handle, and maybe exposure on different markets, but these are US exposure ETFs. Very liquid product, very, very, very liquid product. You can trade options on these. You can trade outrights. You can trade, in some cases, double and treble leverage. So I wouldn't mess with that sort of stuff. Treble leverage ETFs, like treble long, treble short ETFs. Very dangerous stuff. Okay, so REITs. This is a tough one. The whole chart pattern here looks like a dog's dinner. It's hard to say, actually, what is fair value on this. I think coming back to maybe 2016 highs at 35, I think probably can't go wrong there in a 10-year horizon. But then again, in a 10-year horizon, it's very hard to go wrong on anything. Consumer staples, XLP. Consumer staples, XLP. Let's have a look here. 18 highs, pre-COVID, high, 64s. Yeah, feels like we need a reset after a lot of this liquidity that we've had from the Fed. So, would I be crazy in thinking that we just need to flush out a lot of that? I don't know. Flush out a lot of that stymie money. And come back to the pre-COVID highs. Even at pre-COVID, we had a doji there in December or on January 2020, and then down we come. I think we look more to the market pre-COVID. I think looking at 58.95s actually is a nice area for longs. For me, this is not financial or investment advice. We're just analyzing the markets here. Okay, so consumer staples, I like 58s. REITs, this is RWR, and this will be the last one we look at. So this is Spider Series Trust ETF, and we'll have a quick look at this on REITs. But it's this thing is dropping like a fly right now. Especially if it has any Asian exposure, you're having walkouts on mortgages, you're having relinquishing of properties, all sorts of nasty property stuff going on in China at the moment. So if this has any Asian exposure, you want to step aside. But on this, I like 62s. I like 62s down here. And you're probably thinking, shit, Tim, I'm holding some REITs stuff, and I want to buy some more, and I don't know if I can stomach that sort of a drop. And it's like, well, you got to make your own decisions. I'm not doing your trades for you. But I think things get that cheap, and actually, maybe they couldn't get that cheap on the REITs. I don't know what the exposure on this specific REIT is. You can research that yourself. But I like this level here because I just think we flushed out a lot of weak hands here early 2020, and maybe we don't need to come back to the 60s. Maybe just like 77s in here. So opportunities to tier in there across those two. A smaller circle there. Okay, so that is the subsectors of the S&P, and so hopefully that's useful to people. All right, We're going to now get back to the usual programming in the room here at Duggan Capital on the Discord. Please do click the link, subscribe. If you like this video, just let me know. And some comments below would be great to let me know what you're looking at across these subsectors. Okay, have a good session. Cheers.